you've got an opportunity in our backyard, essentially in Houston, for the 7 Square project. I'd love to learn a little bit about what makes this project so great. And in my initial underwriting, I've got some things to add on, and I think you'll probably hit on them. But tell us about what makes this deal so attractive to you and why you ultimately pulled the trigger back in November to go after this asset.
Sure. So we're buying 7 Square apartments in Houston, Texas. It's in a fantastic neighborhood. It's called Memorial. It's zoned to Memorial High School, which is probably the best public high school in Houston. People move to Memorial to send their kids to Memorial High or junior high. So we like that a lot. The asset is built in 2009. It's 402 units. It is huge. It's a well-built, well-constructed mid-rise wrap product with a lot of scale. This is an institutional sized asset and an institutional quality asset. It used to be called the Alexan Silver. And Alexan is Greystar's brand. So they used to own and run the asset before it was sold. We're getting a fair basis on the asset. The asset has been operationally challenged for a number of reasons that I won't get into, but I don't think it really relates to the asset itself. And so there is a lot of upside in terms of value add renovations and overall property cleanup and resident engagement and all of these things that make a community and allow us to improve the financial performance of the asset. So institutional quality, mega scale, fantastic location, great schools, really expensive home prices all around us, a discount to replacement cost, built very sturdy, and a lot of upside meat on the bones.
When you say upside meat on the bone, what are you referring to? Is it the rent rolls? Because when I looked at it, it seemed that the rents were tremendously undervalued to the market. And I physically, by the way, I trust all the data that I see. I trust and verify anytime I evaluate a deal. But I actually went and physically to the website of the competitors of 7 Square and tried to look at the floor plans and book a lease, and actually saw the cost per month. And the estimates in your comps, by the way, were undervalued. So I actually think you even have more meat on the bone than what those current market prices reflect.
Amazing. If you keep it up, you're going to get a job with me. Right. So upside means that the rents in place are probably less than they should be. This is sort of a delicate topic. We don't like to take over properties and just jam the rents. It has to be a yin and a yang, a give and a take, sort of a karmic circle where we're providing value to the property in terms of interior unit upgrades that improve our residents' quality of life, exterior cleanup, and this property does need a fair bit of cleanup and TLC. That's why rents are less than they should be, one of the reasons. But we don't just come in and jam our residents. It has to be a give and a take where we're giving value, and in exchange we ask for the same in return. But yeah, we essentially see that our competitors and comps in the market are charging $450 more than this property because our residents' current living experience is what I would call it less than it should be.
That's great. And ultimately, for listeners who are interested in this, we are looking, I think you are looking at institutional partners with the potential opportunity for some smaller accredited investors to come in kind of late in the game for anything that might be left over. I think this is a very attractive multifamily deal in a very competitive space, but it's a prime location. I love the neighborhood, and you are absolutely right. The school systems are highly sought after.